decisions are much more organized, right? Where we will get the expected outcome after taking the decision. Non-programmed decisions are those decisions which we have to take where we don't know what the outcome might be, or we will be able to get to know the outcome after a certain period of time, right? So those type of decisions are called non-programmed decisions, which is right. So 80 to 90% of the decisions that the managers take today are non-programmed decisions, right? So these are some of the examples of a program decision. These are some of the program. I will give you one example of that restaurant, restaurant which we have discussed yesterday. That suppose if you went to a French restaurant, right, and you go there and you take up the menu and you see that all the menus, all the things on the menu card are written in French, but since you are not able to, but since you don't know French, right? So it will be difficult for you to order anything or try to understand or read what is exactly written in the menu, right? So this scenario is an example of what, everyone? I discussed it yesterday. This is an example of let's see how many of you remembers. No one remembers? I gave you one example yesterday. Hello. Hi everyone. Good evening. Can all of you hear me? Okay, great. So welcome to IIMTS. Thank you for attending my class today, everyone. Right. Hope all of you are doing good and have a great day today. Does anyone have any questions for me for the topic that we have covered in the previous class, last class and last of last class? Does anyone have any questions to ask? I have sent that case study that we have discussed yesterday as well as the PPT to the coordinator, right? And I hope she has uploaded it in LMS, right? So if any one of you wants to go to that PPT or that case study, right? Then you can check it out in LMS. Right. Now the topic that we will be studying today is accounting, right? The basics of accounting. How many of you are familiar with accounting? Yes, this is the first class of accounting, and I will be taking the classes on accounting on regular basis each week. Right, Nick, Fahad? Right, since many of you requested that you want to study accounting, so what the management has planned is that they will take that I will take up 1 or 2 classes of accounting each week. Okay. Okay, Prabha says you have done MCOM. Great, great. Right. So some of you are not are new to accounting, right? And some of you are familiar with accounting, right? So we will go through the basics of accounting first, and then we will go deep into the concept. Okay, Sandeep says I'm working as an accountant. Great, Sandeep. With which firm, Sandeep? Then I have to take tuition from Parava. What is Parava? Nixon? What do you mean by Parava? Here I am working. Okay, so I can see a lot of accountants in my class today. That's good. Okay, Prava. Okay. Okay, Sandeep says I'm working in a 3-star hotel. That's good. Okay, that's great. Anyways, 1 second. So what is accounting? Let's see how many of you answer this. What is accounting? What is the meaning of the term accounting? Calculation, Lazy says. Okay. What about others? Okay, let me type it out. Okay. Yeah. 1 second. Yes. What is the definition of accounting? Many accountants are here, so they might be knowing it. Financial records maintaining, Abdul says. Very good. Okay, let's see the meaning and definition of accounting first. In order to see, it's written on the whiteboard. Okay. Can you see what I've written on the whiteboard? Okay. I hope my voice is coming clear to everyone. Okay, great. Let's read out the definition of accounting together. Accounting as an information system is the process of identifying, measuring, and communicating the economic information of an organization to its users who need the information for decision making. It identifies the transactions and events of a specific entity. Does everyone understand the term entity? Does everyone understand what entity is? Entity means existence, a thing with distinct and independent existence. Right, this is the meaning of an entity, a thing with distinct. Distinct means different. Okay, distinct means different. A different and independent existence. Entity. A transaction is an exchange in which each participant receives or sacrifices a value. For example, purchase of a raw material, right? An event, whether internal or external, is a happening of consequence to an entity. For example, use of raw material for production. An entity means an economic unit that performs economic activities. Right? This is the meaning of accounting. Then comes definition of accounting. Right? According to the American Institute of Certified Public Accountant, that is AICPA, which is a very reputed body of the world in the world, they defines accounting as the art of recording, classifying, and summarizing in a significant manner and in terms of money, transactions, and events, which are in part at least of a financial character and interpreting the results thereof. This is the definition of accounting. Now the question arises, why do we need accounting? The objective, right? Because we can do all our work without accounting as well. Then what is the need for accounting? Hello Nasrullah, good evening. How are you doing? Welcome to IMTS, and thank you for attending my class today. Okay, great. Nice to see you in class. The topic that we are discussing today is the basic concepts of accounting. Right, so we have just discussed the meaning of accounting and the definition of accounting. Yes. What is the objective behind accounting? Let's see the objectives. Everyone just think. What do you think? Why is it so important? Track business transactions. Okay. Like monitoring. Okay, we need to know profit and loss as well, understanding the things in a better way. Okay. Any other reason? Anyone feels? Okay, 1 second. Okay, let's see the objectives of accounting. Objectives of accounting may differ from business to business depending upon their specific requirements. However, the following are the general objectives of accounting. Number one, goal or objective. It gives a clear picture of financial status. Yes, Papa, very good. Well tried. To keep the systematic record. Right now, in an organization, we have to keep the record of every financial activity. Right, so keeping the records in a systematic and organized way, so that whenever in future we want to retrieve the data related to accounting, it will be easier for anyone to access that data or to get that data, right? Generally, if some new employee comes or some old employee leaves the organization, right, and if the new employee wants to access the data, right, so it will be easier for him to access the data once he knows that it is well organized and he knows the exact place, right? That is why the concept of accounting is very important. Lazy says to calculate the expense and the profit. Yes, very good point, Lazy. Right, to keep a systematic record, as it is. One second. Let me highlight it. That we are here to keep the systematic record. It is very difficult to remember all the business transactions that takes place. Accounting serves this purpose of record keeping by promptly recording all the business transactions in the book of accounts, which is also called bookkeeping. Right, we will be coming to that term bookkeeping shortly. Right. Next objective, to ascertain the results of the operation. Right, to ascertain the results of the operation. What do we mean by ascertain? Right, ascertain means to find something, to find out for certain or make sure of. Like, for example, to find the cause of the accident, or we can say to find the ascertain of the cause of the accident, right? To find something. Why this has happened financially, why that has happened financially, like that. That is the meaning of ascertain, to find something out of certain, right? Making sure of, right? Accounting helps in ascertaining results, that is profit earned or loss suffered in business during a particular period, right? Which we have seen that organizations declare their profit or loss on a quarterly basis, right? Each year, right? To check the progress of their organization or how well that organization is performing. For this purpose, a business entity prepares either a trading and profit and loss account or an income and expenditure account, which shows the profit or loss of the business by matching the items of revenue and expenditure of the same period. I hope all of you are familiar with these basic terms: revenue, expenditure, profit and loss, income. Does everyone know? Okay, Prabha. Okay. Next objective, to ascertain the financial position of the business, right? Whether the business is going in profit or loss, right? So with the help of accounting, we get to know the exact figure either of profit or loss, right? In addition to profit, a businessman must know his financial position, that is, availability of cash, position of assets and liabilities, etc. Right, how much cash the organization is having, the position of the assets and liabilities, etc. Prabha, can you hear me now clearly? What do we mean by assets, everyone? It is a very popular accounting or commerce term. What do we mean by assets and liabilities? Let's see how many of you answers. Abdul says property. Okay. What do we mean by assets and liabilities? Liabilities are something that a business owns. Go to what we have in our stocks. Okay. See, asset is an item or a property which is owned by a company. Right, and what is a liability? The assets means we can turn into cash of some. What about liability? Liabilities are the obligations of the company to transfer something of value to another party. Payables, debts, etc. Yes, very good. Part. About is responsibility to pay. Okay, very good. Right, so fine. In addition to profit, a businessman must know his financial position, that is availability of cash, position of assets and liabilities, etc. This helps the businessman to know his financial strength. Financial statements are the barometers of health of a business entity, right? So with the help of financial statement, we can get to know the financial status of the organization, right? Next point or next objective for which accounting is important, to portray the liquidity position. What do we mean by the term liquidity? Liquidity is a measure of the ability of a debtor to pay their debts as and when they fall due, right? Right. It means that how capable the organization is able to pay for the services used by them, not immediate and cash. This is liquidity. In accounting, liquidity is a measure of the ability of a debtor. Debtor means anyone who has taken any loans from any banks, right? How capable they are to pay the bank loans, right? Or if they have taken any services from anyone, right, for which they have to pay to the person, pay to the organization who is providing the services, right? So whether that organization is capable of paying or not, that is what we mean by liquidity, right? So liquidity is the ability to pay short-term obligations. Getting my point, everyone? Let's take a look at one example, what liquidity exactly is. Right, let's see one example. Okay, how it works, for example. Let's say you take an old painting from the attic to the local filming of Antiques Roadshow. The expert says your painting is worth 50,000. Surprise? That's great news. Expect that it would take months to find a buyer, and the buyer may only want to pay $35,000 or $40,000. Your painting, while valuable, is not very liquid. That is, you cannot convert it into 50,000 very quickly or easily. Houses are not very liquid either. They too can take months to sell, and buyers often don't pay the sticker price. This is what liquidity is all about. Clear? Keeping some deposit, reserve cash, securities, etc. Yes, so that those reserve cash or deposit can be used at the time of urgency, right, or at the time of emergency. Here, okay. So financial reporting should provide information about how an enterprise obtains and spends cash, about its borrowing and repayment of borrowing, about its capital transactions, cash dividends and other distributions of resources by the enterprise to owners, and about other factors that may affect an enterprise liquidity and solvency. And the next objective is to protect business properties. Accounting provides up-to-date information about the various assets that the firm possesses and the liabilities that the firm owns, so that nobody can claim a payment which is not due to him. Right, so these are the objectives. Now, I will also send this PDF file to the coordinator, right? So you can get this book from Reform LMS. It is a very good book. Right? It has all the topics. Sorry. Meaning and definition of bookkeeping. 1 second. Meaning of account. Yeah. We were over here. I copied that objectives from here. Can all of you see the book I have shared? Everyone? Okay, so we have discussed till here to protect the business properties. So there are 2 more objectives. Okay, this is the 6th one. To facilitate rational decision making. Rational decision making I already discussed with you in my previous lectures. Accounting records and financial statements provide financial information which helps the business in making rational decisions about the steps to be taken in respect of various aspects of business. Right. So with the help of accounting, if any manager or firm has to make any rational decision, then at that time they can retrieve or get the data from the accounts department, which will be very helpful for them in quick decision making. Right. 7th objective, to satisfy the requirement of law. Entities such as companies, societies, public trusts are compulsorily required to maintain accounts as per the law governing their operations, such as the Companies Act, Societies Act, and Public Trust Act, etc. Maintenance of accounts is also compulsory under the Sales Act and Income Tax Act. Right, so these are the 7 objectives. Right, objectives. Now, next thing is importance of accounting. So we have seen the functions of accounting, the meaning of accounting, the objectives of accounting, and now the importance of accounting. Right, so these are some of the basic terminologies: owners, management, creditors, employees. I hope all of you have heard these terms. So let's quickly go through them again, right? Because this is the basic of accounting. Owners. Who are the owners? The owners provide funds or capital for the organization. Capital means the money. They possess curiosity in knowing whether the business is being conducted on sound lines or not, and whether the capital is being employed properly or not. Owners, being the businessmen, always keep an eye on the returns from the investment. Right? So the owners are investing in the business, they are expecting a return for the investment they are making in the business. Comparing the accounts of various years helps in getting good pieces of information. Baba says shareholders. Yes, very good, Baba. Next is the management. The management of the business is greatly interested in knowing the position of the firm, where the firm exactly stands in the market as compared to their competitors. The accounts are the basis. The management can study the merits and demerits of the business activity. Thus, the management is interested in financial accounting to whether the business carried on is profitable or not. Right. So, management looks after the overall functioning of any organization, and they see to it that the organization is on the right track and giving the outputs and returns, right? So they work more like a monitoring body, right? And they are the supreme body for taking any final decision, right? Does the management is interested in financial accounting to find whether the business carried on is profitable or not? The financial accounting is the eyes and ears of management and facilitates in drawing the future course of action, further expansion, etc. Right. Next are the creditors. Who are the creditors? Everyone? who are creditors. Money or stock lenders, okay. Creditors are the persons who supply goods on credit, or bankers or lenders of money. It is usual that these groups are interested to know the financial soundness before granting the credit. The progress and prosperity of the firm to which the credits are extended are largely watched by creditors from the point of view of security and further credit. Profit and loss account and balance sheet never centers to know the soundness of the firm. So generally these creditors are those persons who supply the goods on credit, or the bankers or the lenders of the money. They are called the creditors. Dear everyone, can all of you give me an example of a creditor? Since all of you are working guys, so, and some of you are accountants, vendors, okay? Prabha says vendor, Fahad says vendor, okay? Suppliers, okay? Next one, I asked for an example, not the definition. Who lends money to the business, okay? The bank loans, yes, very good point. Debentures, okay? Okay, good, tell me. Right, so a creditor may be a bank or a supplier. So generally there are two types of creditors. One are the personal creditors. They are the people who loan money to the friends or family, right? And the other creditors are the real creditors. They are the financial entities who require borrowers to sign legal contracts that grant the creditor some sort of collateral. Example, the house, car, jewelry. If the borrower fails to repay the loan, they keep the money. Right. Let me say one example of creditors. Okay, let's see. Let's read it together. So there are generally two types of creditors. One is the personal and the other one is real. Personal creditors are people who loan money to friends or family, and the real creditors are the financial entities who require the borrowers to sign the legal contracts that grant the creditors some sort of collateral, like car, house, jewelry. If the borrower fails to repay the loan, they keep the property, right? Let's look at a scenario with a real creditor. Suppose that there is some bank XYZ to whom you go to for a loan, right? If you are approved and then lend you money, the bank XYZ becomes your creditor, right? Right now, why will the bank give you the loan, right? Right. For that, you have to keep some sort of property or some sort of guarantee or guarantor with the bank, right? So that if you fail to repay that money to the bank, then the bank will keep that property, or they will try to recollect it from the guarantor. So you have seen many times that if anyone is taking any loans from the bank, the bank always asks for one guarantor before giving the loan, right? So that if that person fails to pay the loan, then the bank will approach that guarantor to collect the money, right? Individuals and companies can have several creditors at any given time for many different types of debt. Additional example of creditors who extend credit lines of money or services include utility companies, health clubs, phone companies, and credit card users. Not all creditors are considered equal. Some creditors are considered superior to others, while others are subordinate. For example, if company XYZ issues bonds, the bondholders become creditors senior to company XYZ shareholders. And should company XYZ then go bankrupt means they don't have any money. The senior bondholders are entitled to repayment before the shareholders are. This is the role of creditors. Clear, everyone? Any doubts so far anyone has? Okay. Next comes the employees. Payment of bonus depends upon the size of profit earned by the firm. The more important point is that the workers expect regular income for the bread. The demand for wage rise, bonus, better working conditions, etc. depend upon the profitability of the firm and in turn depends upon financial position. For these reasons, this group is interested in accounting. Right? So employees, all of you are aware. Next is the investor. The prospective investor who want to invest their money in a firm, of course, wish to see the progress and prosperity of the firm before investing their amount. Right? All these people who are involved in share trading, right? And they put their money on some firm, right? They are the real investors. Right? For that, the companies take out the IPO, right? And request people across the country to invest their money in their company. Right? Right? This is to safeguard the investment. For this group is eager to go through the accounting, which enables them to know the safety of investment. Right? So investors before investing always are interested in going to the balance sheet of the particular organization. Right, so that they will be in a better position to understand the financial position of the organization, and once they feel comfortable, then only they will bet their money on the organization. Yeah. Any doubts so far anyone has? Sandeep following, Lazy, Ashwin, Mohammed, Sanobar, Fahad, Kelvin, Ajit, Nixon, Prabha. Okay, great. Then comes government. Now, when all this process goes on, investors are investing money in the company, right? Government plays a role of monitoring the whole process, so that no investor feels that they are being cheated or their money are not being returned by the by that company, right? So for that, government has made all these government bodies like SEBI, right? SEBI in India, right? Who looks after all these things, right? Recently, there is a case of Sahara. I don't know how many of you know that, right? There is a company called Sahara in India, right? Whose owner is Subrata by Sahara. Sahara is earlier the sponsor of Indian cricket team, sponsor, right? So it is a very famous company. So what they did, they have taken money from the investors, right, for their own business, but they failed to pay the money back to their investors, right? As a result of which SEBI, which is a government-based body, first requested them to pay the money of the investors. When they refused to pay, they went to Supreme Court, and the court ordered for arrest of that people, that owner of that company, right? And then the court is saying that if it fails to pay the money of the investors, then they will start selling their property, right? So that owner is still in jail from past 1 year, right? So government keeps a watch on everything so that everything is going smooth and fair, so that no one feels that they are being cheated. Consumers, these groups are interested in getting the goods at reduced price. Therefore, they wish to know the establishment of a proper accounting control. Which in turn will reduce the cost of production, in turn less price to be paid by the consumer. Researchers are also interested in accounting for interpretation. Research scholars are those who does research in accounting. Right, and try to find out new things. Accounting information, being a mirror of the financial performance of a business organization, is of immense value to the research scholar who wants to make a study into the financial operations of a particular firm. To make a study into the financial operations of a particular firm, the research scholar needs detailed accounting information relating to purchases, sales, expenses, cost of material use, current assets, current liabilities, fixed assets, long-term liabilities, and shareholder funds, which is available in the accounting record maintained by the firm. Right, so these 7 are the pillars of accounting, or all 7 have a major role to play in accounting, right? So it is important to know who they are and what are their functions and what are their roles and responsibilities. Right, now let's come to one PPT. Accounting concepts and principles. So any questions so far anyone has? Does anyone have any questions to ask? Okay, let's proceed then. This is the introduction we already did. Actually, there are a number of accounting concepts and principles based on which we prepare our accounts. These are generally accepted accounting principles laid down, accepted assumptions and guidelines, and are commonly referred to as accounting concepts. We did them. Who are the investors, lenders, management, suppliers? We go to the government, customers, employee, public. We have no point in wasting time. Now the limitations of conventional financial statement. You know what a financial statement is? Companies may use different methods of valuation, cost calculation, and recognizing the profit. The balance sheet does not reflect the true worth of the company. Financial statements are different from balance sheets. Financial statements can only show partial information about the financial position of an enterprise instead of the whole picture. Anyway, let's go to the concepts, accounting concepts. Now these are the concepts. These are the terms: business entity, money measurement, going concern, historical cost, prudence, conservatism, materiality, objectivity, consistency, accruals, realization, uniformity, disclosure, relevance. Let's see each of them what they are. First is a business entity. Let's see its meaning. The business and its owners are two separate existent entities. Any private and personal incomes and expenses of the owners should not be treated as the incomes and expenses of the business. For example, let's take a look at example. Suppose insurance premiums for the owner's house should be excluded from the expense of the business, right? The premium does not come under the expense because that premium is a part of investment, right? Because so that once that insurance policy gets matured, that the owner will get the sum of that premium for all that particular time plus the interest. The owner's property should not be included in the premises account of the business. Any payment for the owner's personal expenses by the business will be treated as drawings and reduce the owner's capital contribution in the business. So these are the three examples of business entity. Any doubts so far? Anyone have? Let's proceed. Money measurement. Okay, just excuse me for a second, right? I will be just back in a minute. So in the meantime, just go through this meaning and example. Right, I'm just coming in a minute, Abdul. Hello. Okay, I'm back. Can all of you hear me? Well, okay. So let's see, what do we mean by money measurement? Meaning all the transactions of the business are recorded in terms of money. Right? It provides a common unit of measurement. Right? For example, the market conditions, the technological changes, and the efficiency of management would not be disclosed in the accounts. So what do we mean by money measurement? Next is going concern, meaning the business will continue in operational existence for the foreseeable future. Financial statements should be prepared on a going concern basis unless the management either intends to liquidate the enterprise or to cease trading or has no realistic alternative but to do so. This is what we mean by going concern. Let's take a look at example to make it to understand it more clearly. Example, possible losses from the closure of business will not be anticipated in the accounts. Prepayments, depreciation provisions may be carried forward in the expectation of proper matching against the revenue of future periods. Fixed assets are recorded as historical costs. Right? These are the entries in which that we have to make in our financial statement. Right? The fixed asset will be entered as historical cost. Does everyone understand the term depreciation? Does everyone understand what we mean by depreciation? Reducing the value of the asset. Okay. See, depreciation has two aspects. One is the decrease in the value of the assets, and the other one is the allocation of the cost of assets to periods in which the assets are used. Let me write it down. Nixon says loss of value in a percentage per year. Very good, Nixon. And Pahar says reducing the value of the asset. Yes, Pahar, very good. So in accounting, depreciation refers to two aspects of the same concept, that is the decrease in the value of the assets, which is also called fair value depreciation, and the allocation of the cost of assets to periods in which the assets are used. Historical cost. Meaning assets should be shown on the balance sheets at the cost of purchase instead of the current value, right? So in the balance sheets, we will always mention the cost of purchase instead of the current value, right? For example, the cost of fixed assets is recorded at the date of acquisition cost. The acquisition cost includes all the expenditure made to prepare the asset for its intended use. It includes the invoice price of the assets, but the freight charges, freight means the shipping charges, the insurance of the installation costs. Next is prudence or conservatism. Let's see what it means. Meaning the revenues and profits are not anticipated. Only the realized profits with reasonable certainty are recognized in the profit and loss account. However, provision is made for all known expenses and losses, whether the amount is known for certain or just an estimation. This treatment minimizes the reported profits and the valuation of assets. Clear? But we can also go through conservatism concept here in this link. Right, on this link you can, if you need more information on conservatism, you can go here. Right. So I think we can stop over here today. We will continue with this same topic tomorrow, because I think we have one more class after 3 minutes with Professor Gorima, I think. Right, so we can stop over here today and we will continue with the same topic tomorrow. In the meantime, if any one of you have any questions, you can ask, or else we can wind up the class. Right, so thank you for attending my class today, and please do fill the feedback form at the end of the class. See you tomorrow. Good night. Take care, all of you, and thank you very much for attending the class. Good night. Bye-bye. Thanks, Abdul. Thank you.